Today in crypto. Despite playing an increasingly important role in expanding the scope of the global crypto ecosystem, decentralized autonomous organizations, DAOs, have garnered considerably less attention than decentralized finance, DeFi, and a raging bull market for non-fungible tokens, NFTs. DAOs are a logical extension of DeFi apps, made feasible by the blockchain's capabilities, and have revolutionized governance through community-led voting procedures, including holders of the native tokens. This self-governance approach gives native token holders complete control over the decision-making process and a proportionate share of the distribution fees, strengthening the overall pitch for new investors to join these networks. DAOs differ differently in terms of the crypto assets they deal with. Still, they all encapsulate the essential concepts of blockchain technology to allow for transparent investor engagement in assets and autonomous financial instruments safely and securely. While projects related to DAOs currently contribute only about 2.5% of the total cryptocurrency market capitalization, this is expected to grow significantly in the future, given the growing number of DAOs launching projects such as Automated Market Maker, AMM, exchanges that are forming alliances with centralized crypto exchanges to attract investors and liquidity that will be used to develop the crypto ecosystem further. AMM exchanges are decentralized since they are administered by a voting system including community members who have invested in the native tokens rather than by a single company. This gives them the authority to modify the underpinning protocol and even the incentive system, allowing them to function in a truly democratic manner. Furthermore, these token holders get a predetermined proportion of the exchange's transaction volumes, supporting the development of a more stable token user base with a long-term investing mindset. This incentive structure distinguishes these tokens from those issued by non-DAO projects, resulting in more cash flowing into DAO-run projects. Low transaction prices and high transaction speeds are other features that make DAO-based AMM exchanges popular. Users may easily participate in staking, yield farming, and liquidity mining across several blockchains thanks to connections with popular blockchain networks like Ethereum and Layer 2 networks like Polygon. The Bitcoin (BTC) network is the earliest example of a decentralized autonomous organization, DAO. Even though most network users have never met, the network scales by community consensus. It also lacks a centralized governance framework, requiring miners and nodes to express their support. By today's standards, however, Bitcoin is not considered a DAO. Dash would be the first real DAO by current standards, as the project features a governance structure that allows stakeholders to vote on how the treasury is used. Other, more sophisticated DAOs are in charge of establishing cryptocurrency-backed stablecoins, such as decentralized networks built on top of the Ethereum blockchain. In certain circumstances, the organizations who started these DAOs gradually relinquish control of the initiative, eventually becoming irrelevant. Token holders can participate in governance ideas such as hiring new contributors, adding additional tokens as collateral for their currencies, and changing other settings. A DeFi lending system released its governance token in 2020, which was allocated via a liquidity mining mechanism. To put it another way, everybody who interacted with the protocol would be rewarded with tokens. The approach has now been adopted and altered by other projects. Is yet another wholesome community created to make trading entertaining for traders, including play-to-earn fantasy games, the perfect amount of DeFi elements, and the ability to mint rare NFTs. Revenue from all of these sources is combined to produce a revenue pool that contributes to developing a revenue pool. A decentralized autonomous organization, DAO, will be developed from the pool of income earned. Apart from these, Coin Fantasy has plenty of other ways to unite the community as one. They also provide a white label service for any platform interested in gamifying their community participation with Coin Fantasy's game. Coin Fantasy allows high-quality early-stage businesses to collect funds by hosting a game pool, with the winners receiving ETO allocation. In exchange, Coin Fantasy would launch NFTs of such projects that would be used in the fantasy game. It would be a terrific way for exchanges/trading platforms to generate leads, since consumers who play fantasy games on our site would be excellent users for exchanges. Any project platform may utilize Coin Fantasy to create gaming pools to engage their users/community. Users may avoid bots and receive a creamy layer of users who understand the market this way. It would be a perfect model for play, learn, earn. As one searches the online space, the term metaverse is becoming increasingly common, and one has certainly seen a spotlight on this ecosystem. Many people are having difficulties trying to understand this new paradigm. However, this has not stopped many early adopters from engaging with these projects, and seeing various metaverse projects take off and catch investor attention. Whilst the technology for creating a metaverse is new, the concept was first described by Neil Stephenson in his science fiction novel Snow Crash, published in 1992. Although derived from cosmological concepts, the evolution of what metaverse means is becoming synonymous with the virtual world. It is a system of numerous, interconnected virtual and usually user-generated worlds which are accessible through a single user interface. However, the advent of metaverse might just be the beginning. The virtual space is going to evolve from metaverse to multiverse and eventually omniverse. The concepts of metaverse, multiverse, and omniverse will be familiar and easier to grasp to those interested in cosmology. After all, these terms are inspired by cosmology. Metaverse is analogous to our universe but in a digital space. However, this digital space will be more immersive than the digital experience as we are used to now. As the universe is the sum of all existence, space-time and all its contents, metaverse will be the sum of all of an individual's and a community's digital existence. A multiverse is a collection of multiple observable universes. Each universe in a multiverse shares common laws of physics, elementary particles, and everything in between with the parent universe. The universes within the multiverse can be called alternate universes, parallel universes, or many worlds. Expanding this hypothesis to the digital sphere, a multiverse will be a collection of numerous metaverses. They can share similar programming languages, be interoperable, and have some assets and avatars between different metaverses. An omniverse is a superset of every single universe and multiverse that has existed. Omni in Latin means of all things. In essence, omniverse is the final existence. Although digitally we are from creating this space, we can be sure that every attempt at interoperability is an attempt towards reaching omniverse. In digital cosmology, metaverse is at the lowest level. There can be a Facebook metaverse, a Google metaverse, and so on. Groups of these metaverses through partnerships and user demand can evolve into a multiverse. Doing so will require a common set of standards, frameworks, and interoperability requirements, making sharing of content, data secure and fast. At the highest level, there is omniverse, which essentially becomes an overarching term that covers all the metaverses and multiverses that not only exist but will exist in the future also. If the developers move towards the omniverse in the virtual space, there will be a need for a set of overarching standards that will govern the sharing of content and data between multiverse. One of the needs for standardization will be to have a creator economy accessible and ubiquitous to all. Even though the creator and influencer economy has blossomed over the past decade, there is no robust platform for them to consolidate and monetize their fan base. While leveraging these above concepts, the team from Dual Cities then created a metaverse that aims to take influencers to the next level. By providing the infrastructure influencers need to build thriving metaverse communities, large-scale adoption will become a reality. Equipped with Web 3.0 governance, access tokens and powered by innovative NFT solutions, Dual Citizen empowers you to build and take control of your own metaverse communities. Influencers, the key drivers of online engagement and adoption today, now account for more than 50 million users globally. Influencer entities include professional and collegiate sports clubs, legacy media properties and verified groups such as athletes, content streamers and celebrities. Influencers are some of the most trusted entities on Earth and have grown exponentially in their importance to global consumption. The Dual Citizen metaverse will be a blockchain-based, decentralized community framework that empowers influencers, and will make the metaverse a much more equitable space than the centralized platforms of social media. Powered by the immersive technology tools of extended reality, XR, Dual Cities creates personalized metaverse communities for influencers that provide the resources to build, grow, and monetize their assets and fanbase. Dual Cities is in the prime position to take the influencer economy to the next level, through utilizing the best that the ownership economy has to offer, and leverage the Web 3.0 tools available to deliver true value that influencers can pass on to fans as well as brands. With metaverse and multiverse at the heart of the project, the platform will become a fully immersive experience, while giving its users all monetization tools required to move forward and into this new and unexplored space. Again, the question influencers are asking is, when will I get my dual citizenship? The Polkadot Parachain auctions are continuously creating waves in the blockchain and DeFi space as promising projects are participating and seeking support to enable their vision for the future of the Kusama ecosystem. Composable Finance has officially launched their crowd loan for the auctions in the second batch, opening the door for the DeFi ecosystem to support their efforts in securing a Polkadot Parachain. It is important to note that Composable Finance has previously procured a Kusama Parachain and is taking a similar approach in their campaign for the Parachain. Composable Finance aims to bring to life the idea of cross-chain communication to ultimately create a blockchain-agnostic environment. Through extensive research, they have identified the benefits of the Kusama ecosystem and have targeted their efforts towards Polkadot and Kusama to enable their underlying vision. As previously mentioned, Composable Finance successfully obtained a Kusama Parachain by the name of Picasso, which acts as a supportive hub for their innovation and is now engaging in the next steps of securing a Polkadot Parachain to further advance their infrastructure and capabilities within this space. Notably, Composable Finance allows users to contribute to their crowd loan campaign using ERC20 stablecoins in addition to $. This functionality allows for contributions from a broader range of supporters outside of just $. Holders and is an exciting way to converge and unify ecosystems to engage in joint progress for interoperability, which aligns with the vision of Composable Finance. Additionally, Composable Finance offers very competitive rewards for early contributors of the crowd loan outlined here. 12% of their native layer token supply earmarked for crowd loan contributors, with the additional incentives of Composable Finance is on the journey to establish a truly interoperable environment for developers and users engaging in the broader DeFi ecosystem, one that is not held down by the barriers of the siloed multi-chain framework. The creation of a fully blockchain-agnostic environment would tremendously impact the capabilities of the entire space, and it is exciting that leaders such as Composable Finance are coming forward to spearhead this vision. The procurement of a Polkadot Parachain is thus an instrumental step in enabling Composable Finance to move the needle towards interconnectivity and cross-chain communication in blockchain. The next time you hear someone dismiss the metaverse as all hype, kindly inform them that a 500 square meter plot of virtual real estate is worth more than their house. At any rate, this stinging retort should suffice, providing your adversary's abode is worth less than $2.43 million. The price associated with the largest metaverse land acquisition to date. The eye-popping purchase by the Metaverse Group reflects a groundswell of support among investors, who are increasingly betting big on vibrant virtual ecosystems wherein users work, earn and socialize. Even Facebook is wise to the prevailing headwinds, having recently declared that it will transform from a social media firm into a metaverse company. While Facebook's executive branch will be keen to establish the company as a dominant player in this rapidly expanding market, a note on their new website explains that the metaverse will be a collective project that goes beyond a single company. It will be created by people all over the world, and open to everyone. It's a sentiment shared by Solace, a soon-to-be-released metaverse project built on top of Solana's super-fast blockchain. Devised by a core team of senior software engineers and creative designers, with assistance from VR gaming experts and crypto/DeFi veterans, Solace aims to be the most immersive and interactive virtual environment in the blockchain universe, with a colorful landscape made up of 5 unique islands. In this alluring archipelago, players can participate in a range of activities, whether they wish to explore, invent, earn, game, barter or socialize. Key components of Slice include an integrated 3D NFT marketplace wherein users can buy, sell and browse items such as pets, whose rarity will determine APY rates, avatar apparel, the raw materials needed to construct various items, or rare gems, and even land and buildings. In the case of the latter, land NFTs are represented by 15 by 15 m squares with the total number of parcels capped at 60,000, while Slice owns all public spaces, plazas and roads, none of which can be bought or sold by users. The rest of the terrain is up for grabs. Compatible with wearable VR/AR tech out of the box, Slice will take users to a phantasmagorical dimension. A released sketch of the metaverse shows several floating islands, each with its own unique properties and features. The first one users can get to grips with is Amoris, described as a utopia for the civilized human species. Thereafter, islands such as the mysterious Yamashi and volcanic Ludiver will offer their own delights. Interestingly, Slice allows users to both take advantage of inbuilt earning opportunities and create their own revenue-raising models. Thus, players can stake tokens on land plots to obtain extra APY rewards while also getting to create mini games that others are charged to play. The latter feature is enabled by an editor program, a standalone SDK scheduled for release next autumn. Play to earn (P2E) mechanisms in the form of quests, meanwhile, will incentivize users to complete missions in exchange for rewards. Slice's powerful infrastructure means that it's even possible to run competitions, host ticketed events, fashion shows, concerts, and rent desirable land parcels to other players, with 5% of all marketplace transactions collected as transaction fees. At the center of Slice's burgeoning world is SLC, the project's native currency. By holding such tokens in their wallets, players can vote on governance matters, earn staking rewards, create their own assets, and pick up NFTs from the marketplace. As in the most ambitious metaverse projects, Slice is pitched at a vast cross-section of users, liquidity providers and other DeFi veterans, hardcore gamers, even businesses, who can lease advertising space in busy public areas. While the hype is building nicely for the venture, users will have to wait until early 2022 to get to grips with everything Slice has to offer. Only then will we know whether Solana's latest metaverse project has staying power. The cryptocurrency metaverse is growing rapidly and as a result, has garnered the attention of some of the biggest investors in the industry. One of these investors is Grayscale. The company has recently released a report analyzing the metaverse market growth in the coming years, and it looks promising. Here's what you need to know about Grayscale. They are the largest cryptocurrency asset manager in the world. They have 14 trusts which enable accredited investors or high net worth individuals to invest in over 24 cryptocurrencies indirectly. Its largest trust is Grayscale Bitcoin Trust, valued at over $37 billion. This equates to approximately 3% of the circulating supply, which makes Grayscale the largest holder of BTC according to BitcoinTreasuries.net. Since its conception in 2013, Grayscale has been a subsidiary of Digital Currency Group, DCG. DCG has invested in over 160 crypto companies, and some of these include Coinbase, Circle, Brave, Stacks, Ripple, and Zcash. It has also been interested in metaverse since it invested in Decentraland in 2017. In October, when Facebook announced its rebranding to Meta, the hype bolstered the metaverse cryptocurrency projects like Decentraland, The Sandbox and Jetstar, all of which saw their prices soar to new all-time highs. This most likely also inspired Grayscale to conduct the Metaverse Report. The report is titled The Metaverse, Web 3.0 Virtual Cloud Economies, and was published on 24 November 2021. Grayscale has identified an important trend within this. Players are increasingly moving away from paying-to-play premium games towards free games, which developers monetize by selling players in-game items to enhance gameplay or social status within these virtual worlds. At the minute in the pay-to-play system, if a gamer was to purchase an in-game asset, it has no monetary value for the gamer. The gaming company generates a proportion of its revenue from in-game purchases, and for the gamer, it has no value aside from the fact it can be used in the game. It cannot be sold or traded with other players. This will change with Metaverse and the new play-to-earn (P2E) gaming system that exists within the metaverse. It's only a matter of time before players begin to migrate to virtual worlds where users can create their own content in the form of NFTs and sell or trade these with other players for a monetary value. To impress the potential of the metaverse, Grayscale compares the $30 billion market cap of metaverse cryptos to the $1 trillion market cap of Facebook, the $2 trillion market cap of gaming and esports, and the $15 trillion market cap of the upcoming metaverse companies. On paper, this translates to metaverse cryptocurrencies growth could be anywhere between 30x and 500x in the coming years. Talk about potential. The third section of the report delves into the different niches and crypto projects within the metaverse economy, including blockchain-based gaming. I had a look into this, considering the potential to see who the new kid on the block is when it comes to blockchain-based gaming, and quickly came across Jetstar has recently brought on board a new CTO, Yash Vora, whose expertise is in Web 3.0 and who has successfully developed a P2E mobile game, where players could not only earn but also mine cryptocurrency through their mobile phones. We foresee the possible future of them launching their own Web3 blockchain wallet. So far, through the leadership of their CEO Josh Geer, the team has successfully launched their DeFi token in August 2021, which soared over 10,000% since launch, and now preparing to launch their GameFi and metaverse currency garnered, which will be open to the public on the 17th of December. The company sees itself, beyond being a cryptocurrency project, but rather a gaming and production studio that leverage blockchain, with over 200 games in the pipeline for 2022 and 2023. Among these games are 100 hyper-casual P2E games, 2 mobile games, an arcade battle game inspired by Ark Heroes' success, and a kingdom builder to rival games like Clash of Clans, a AAA CCG similar to Riot's Runtra, and a meta MMORPG. Looking beyond their decentralized ecosystem, garnered and their NFT marketplace Agora will allow other games to use their currency and platform. Participating in their pre-sale, in which slots are limited and predicted to sell out in minutes, there is an opportunity for both crypto and traditional investors to enjoy significant returns as Jetstar establishes itself as pioneer of the blockchain metaverse. With revenue from virtual gaming worlds predicted to reach an incredible $400 billion by the end of 2025, could we be looking at an annual revenue of over $1 trillion by 2030? According to Grayscale, yes, we could. Hit the like button and subscribe to the channel.